Hi everyone, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, May 22nd, 2019, and we are in the final hour of the trading day. As you know, I believe that the closing prices are the most valid prices of the day, and therefore that those are the prices that I use to make my decisions on whether to enter a position or exit a position. So the format for today is that initially we're going to run the legal disclaimer. It's about 40 seconds. We're going to come back. We're going to take a look at my current positions, when I purchased them, why I purchased them, and how I am going to manage them going forward. And then we're going to turn to my stock watch list, and we're going to go down through each one, analyzing support and resistance levels, profit targets, entry triggers. Basically, we're just going to analyze them on a technical basis and see if there's anything that fits my criteria to enter a trade based upon the price at the end of the day. So, and then after that, if you have any question after the market closes, if you have any questions about what we did today, or you're not clear on a concept, please let me know. Happy to answer any questions you have, and or take a look at any particular stock symbols that you are interested in, and I will give you my humble opinion on the strength of the chart or lack thereof. So that is the plan for today, and let's take a look. All right, so first off, we're going to go ahead and we're going to run the legal disclaimer, and I will be back after 40 seconds and we'll get back to business. So hang on.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, we got that out of the way, and all right, well, let's get down to it real quick. Let's take a look, see what the market's doing in general. The Dow Jones currently is down 53 points. The NASDAQ is also down 15 points, and the S&P is down 3 points. So not a huge day either way. Pretty flat. We were down earlier in the morning, but we had a nice comeback, so that's always good. So all right. Well, let's get to my current positions, why I bought them, and what we're going to do with them going forward. How's that sound? All right, so I did buy Canopy Growth on, I guess I should mark this. I did buy that yesterday on the 21st of May. I bought it for a couple reasons. One, we closed below the 200-day moving average. I'm sorry, the 100-day moving average. Then we closed back above. That is one reason I bought it. The second reason is that it triggered a V2. A V2 is what it incorporates 3 bars: day 1, day 2, day 3. Day 2 goes lower than day 1, washes it out. When I say wash out, washes it out, I mean goes below. So it goes below day 1. Day 3 then closes above the close of day 1. So it forms this kind of V. So close below the 100, back above the 100, has a V2 entry. And to throw on top of that, this was the prior range, the low of the range. Then we broke out to the downside of the range, And in addition to closing back above the 100 and the V2, we also closed back into the old range. So we had a false breakout to the downside and reversal. So that is the reason I bought it. I bought it at 44.93. You can see I did hit 2 profit targets today, about 11% here, about 11% here. So I am currently out of 22% of my initial position. We did make it above all the moving averages, at least right now we have. And the RSI is a 50.41. So that is all positive. I mean, it was sold into up here at the top, us being one of them, one of the people that sold into it. But currently right now it's looking pretty good. We've moved over all the moving averages. We are above a 50 RSI. So this is looking good. I mean, it's very likely that we may come back and test this 50, which would be okay, just a normal part of price action. But did take out this range. This is also positive, so let's see where it closes. But it's nice to get, it's always nice when you enter a position if you start having a profit immediately. In my experience, the positions or the entries that you take that immediately go your way are most likely to be larger long-term winners. Just in my experience. It doesn't mean that if you buy something the next day it goes down, it can't reverse. It can, but just in my experience, the ones that immediately take off your way are the ones that you want to keep and that have the best potential for a large profit. So anyway, this has worked out really nice for us. It's up 2.47% already, which is great. So moving forward, where will my stop be? I would say probably the 50 RSI. If we close below the, below the 50-day moving average. If we close below the 50 RSI and it's still above the 50-day moving average, I would probably still hold it because this large bar it's likely that we're going to come back and test that halfway, which is fine. It doesn't mean the chart's broken. So probably a close under the 50 would be my initial stop. And if it continues to move up, as you know, I like to phase out of positions as they go my way, like I did today. So we will continue to phase to the upside and trail our stop to the downside. That's the key. So all right, so canopy growth looks pretty good. All right, DDM, I bought DDM back here on the 15th of May. We've been in this trade for a while, about 4 or 5 days. I did buy this because we closed under the 200-day and then closed back above the 200-day. And that's a legitimate back-tested entry exit system on the DDM that is positive over the long term. So I did buy it here. I did hit 2 profit targets the very next day, took about 22% off. Didn't hit any profit targets the next day, didn't hit any profit targets the next day, did hit 1 profit target yesterday. Actually, yeah, the 2 profit targets I hit were 20% and 20%, so 40%, 60%. So I'm out of about 60 to 65%. I don't know exactly because I don't have the numbers in front of me, but I've only got about 35% of this position left. This blue line here, that is the current 50 RSI for today. So if we do challenge this 50 RSI and fail, then I would go ahead and lock in the entire position and get out of the position. So if it let's say tomorrow it goes up, hits the 50 and fail, I would go ahead and lock it in. If it goes and closes above the 50, then I know it's strong enough that it was able to close above 50, then I would keep the remaining shares that I have and continue to phase to the upside and then tighten up my stop. At this point, if we did go down and even touch my entry point, my initial entry point, I would go ahead and sell it that way as well. So 3 options. If it gets down to my entry point, I will go ahead and lock in the profits because it will be a profitable trade because I've already phased out 55, 65% to the upside. If it tomorrow challenges the 50-day, rejects it, that will be my signal to lock in the profits also. And then if it goes up and keeps going and holds it, I will continue to stay in the trade, continue to phase, and continue to tighten up my stop. So that is DDM. And by the way, DDM is the double leverage Dow. So, if you are normally taking a 10% position size, then you would want to take a 5% position size. You would want to take half because this is double leveraged. If you're taking a 2.5% position size, you want to take a 1.25% position size because it's double leveraged. So keep that in mind. All right, Google. So I did buy Google here on the 20th of May. And why did I buy it here? We had this big, strong day, came up. I didn't want to chase it. It did hit the 50 RSI here intraday and then failed. So if I had been in, I would have gotten out there, but I wasn't in. But I waited patiently for the price to come back to approximately the halfway mark of this large bar. And also, at the same time it did that, it also bounced off the 200-day moving average and closed back above. So that gave me two clues that it was probably going to have some support here because it moved up real strong, came back, held the halfway of this bar, also tested the 200, closed above. My initial stop would have been a close below the 200-day moving average. See, if I would have bought up here and I used the 200-day moving average, I have a huge amount of risk and I have to make a huge amount of profit to the upside. So I like to get as close as I can to the 200-day moving average to give me a good risk reward ratio. So yesterday we hit one profit target, I believe. Yeah, we hit one profit target. Today, you can see this is our first profit target up here. Have not been able to get up there yet. So moving forward, this blue line for today would be the 50 RSI. If we got up to the 50 RSI and it failed, I would go ahead, lock in profits. In the coming days, if it does the same thing, if it challenges the 50-day moving or the 50 RSI and fails, I will lock in my profit. If it closes above the 50-day, I will continue to hold it, continue to phase to the upside, and then tighten up my stop. If it does close below the 200-day, that will be my signal to go ahead and exit the trade, probably for a small loss because we already have hit one profit target. So anyway, that is the plan with Google. Take a look here. Hey Bruce, how you doing? Wheat is good today. There you go. Hope it can stay above 50 RSI. Yep, I know, huh? That's on CGC. So, yep, was a good trade. CGC was a good, nice trade today. All right, so we just talked about Google. We know what we're doing with that. IBB, I did buy this yesterday. And why did I buy this yesterday? Okay, for several reasons. One, we had a V2, and as we discussed with the first stock CGC, a V2 incorporates 3 bars: day 1, day 2, day 3. Day 2 washes out or goes below day 1. Day 2 moves back up, closes back above day 1's close. And the real key to these V1s, V2s is that the market is going one day one way and then rejects it immediately and goes back up. So we don't want anything to do with the prices down here. So as a trader, that's important to know because you never know what's going to happen in the future, but it's good to know what happened in the past. And the market just already told you. It already told you that it didn't want anything to do with these prices down here. So we did have a nice V2. We closed, here the green line, we closed below the channel and back up into the channel. The channel's here and here, 1 ATR, negative 1 ATR. So this was also positive. We closed above the 10-day moving average, which we have not done so for a long time. Up here was the last time that we closed above. You can see we've been under, tried to break over, under, and then finally broke over. And MACD went positive at the same time. So, hey Mount Doji, how you doing? Good to see you. Thank you for coming by today. Appreciate it. So yeah, MACD went positive, V2 entry, and a higher low, and a higher low. Now, because we had this low, went up to here, people that bought here sold here, that drove it down. It was strong enough not to go back down and test, but immediately reverse. So the people that bought here and sold here, the sellers are now out of the equation. So, and the other thing too, if you look at this a little bit in larger context, you see how we have the low, we rally, we make the lower low. Well, we make a lower low certainly than over here, but you see the MACD bars are not as deep here as they are here. So this is what Dr. Alexander Elder, whom I've studied under, calls a double bottom with a bullish divergence. This is lower than here, yet the bars are not as deep as here. So by that, just by that fact alone, it's a good trade. It's a good setup. But then on top of that, we rally, we come back down, we make a higher low, and then trigger the V1, all the other things I was talking about. So I do like to look at this. Our first profit target is, where's our first profit target? 105.36. I think I accidentally deleted that. Okay, so here's our first profit target right here. So it's possible that we might hit that today. That would be nice, right? This is a counter trend trade. So normally in a trend trade, I would get out of 10, 11, 12%, but because this is a counter trade, I would be getting out of about 22, 23% of the trade because it's a counter trend trade, and I want to take more chips off the table when it rallies, when it's rallying from a counter trend instead of a trend. So hope that makes sense. So we'll see if we can hit that today. It would be nice. Need about 40 something cents. But it is up today, and it's up on the very next day that we got into the trade, which is always a good policy. I mean, it's always a good sign when your trades immediately go in your favor. Sitting in my eye doctor's waiting room. Oh no, I hope everything is okay, man. Yeah, shoot, that's no good. All right, silver. We did buy silver back on the 20th of May. And why did we buy it? Well, it went under the 30 RSI and then closed back above the 30 RSI. There are groups of buyers waiting at that 30 RSI level. Doesn't mean it will hold, but we do know that they are there. And so it went under the 30, crossed back over the 30. In addition to that, the price went under the third ATR channel and then closed back above the third ATR channel. So this is a snapback trade. This is a mean reversion trade. I really don't think this is the bottom and it's going up. I expect this to rally 2, 3, 4 days, maybe back up into this range and then come back down and test. That's my gut on this. But I guess the main point I want to make here is that I'm not holding this for the long term. I'm just waiting for a 2, 3, 4 day mean reversion trade, and I will be getting out. And because it is a mean reversion trade or a counter trend trade, each profit target that I hit, I'll be getting out probably 20, 22, 23% of my position. So I'm going to take larger percentage of my position as my profit targets hit because it is in a downtrend. Got pretty close to my first profit target earlier today. You can see the high was 1358 and my profit target was 1359. So I missed it by 1 penny, but that's how it goes. So how to manage this trade going forward. The RSI is currently a 30.79. If it closes under the 30, that will be my signal to get out of the trade for a small loss where my profit target is up here. My stop loss is probably, down in this range. So again, you have to have a good risk to reward ratio. So it is currently holding the 30 RSI. That's good, but a close below the 30, I'm out. As it continues up to the 50, I will be scaling. And I did take a half position on this, everyone. I generally take a half position when the price is under the 200-day moving average. Okay, SPY. So just real quickly, I know everyone that watches this every day sees this, but in case we have new viewers, I want to explain quickly why I buy the SPY every day in the evening time, or at the close, and then sell it first thing in the morning. So basically based off this study, so since 1993, if you would have bought the SPY on the open in the morning, sold on the close or the afternoon, at the end of the day, you actually would have had a negative return of 5.2%. But if you did the opposite and bought on the close and then sold it first thing in the morning, you would have returned 568%, meaning that more than all performance came in after hours trading. So you can see the long-term results of this approach, and definitely the buying in the afternoon, selling in the morning did a lot better than buying in the morning, selling in the afternoon. So it's a long-term approach. You can't really judge this on a week or a month. You need to judge it over years. But the results have been the results are certainly promising. But it does have large drawdowns. I mean, here it had a drawdown for 3 years, right? So you have to take the long approach and look at the past results and say, okay, I would rather base an investment strategy on something that's done well in the past than just what my opinion is going forward in the future. So I've been using this for a month and a half, month and 3/4. I am up on it, although I have had quite a drawdown in the last couple weeks. But as you can see, that's part and parcel of using this. So yesterday I did buy this at the close. I bought it at the close at $286.50, and then I got out $285.40. So lost $1.10 on that today, but it's okay. I took a small position size, 10% position size, and I'll continue to do this every day. Buy at the close and sell at the open. So I will be buying a 10% position size of the SPY when it closes this afternoon. All right. Visa. So Visa, this is one of the only short positions, I think the only short position I've ever taken on this podcast. I generally do not short, but sometimes I do, but it's far and few between. But the reason I shorted Visa, because we had this double top, we had this top, we came down, we came back up, we challenged that previous high, it was rejected. There's a trading approach called Turtle Soup developed by Linda Raschke, which means if you do challenge a high and the first day it goes above but closes below, that is your short signal. And so I did short that at the end of the day on May 16th. The other thing I do want to point out is here's the last high, here's the new high. Look at the reading, the RSI reading of the last high. It was very high. Here we make a higher high, but it's lower. So this is technically an upwards upslope, and this is a downslope. So that is a divergence. The other thing I also want to point out is what's called an ATR divergence. Here at this high, where we went about 3.5 ATRs. This thick line is the ATR, third ATR. So we got it about 3.5 ATRs. Here, even though we went higher, we're at about like 1 5/8 ATR. So you have RSI divergence, you have a ATR divergence, you have a test of the previous high and rejection. So that is why I am shorting. I did hit one profit target a couple days back. I took about 22% of the position off. How do I manage this going forward? If we close back up into this new range, the range that initially failed, if we close back up here, I will go ahead, take a very small loss. You can see intraday, it did get above there, right? But I base my entries and my exits on the closing price. So it did reject it again, which is a good sign from a short perspective. Rejected it once here, rejected it once here. So I will continue to phase out of this to the downside if it goes my way. If it closes back above, I'll go ahead and take a small loss or a scratch trade depending where it closes, because I did take 20% off here when it went our way. Okay, so hope that makes sense. So that is that's what we've got. Let me take a look real quick. So right now, okay, all right. Well, let's run through my current positions and see if there's anything interesting for us today. Let me just take a look at my accounts here and get a feel for what's going on. Mount Doji, I missed what your plans were today for CGC, I think. Okay, real quick. My initial stop, I mean, now that it's moved my way, a close below the 50-day moving average is going to be my initial stop. Hitting 2 profit targets, even if we close back down here or even at my entry point, will still give us a profitable trade. But a close below the 50 makes the most sense for me. So that's how I'm going to manage CGC to the downside. And of course, if it starts trailing up, I will continue to phase out, and then I will start tightening up my stops. As it moves up, this 5-day will start coming up, and I'll probably start using that as my trailing stop. He phased out of some. It is just below 50. Yeah. All right. So let's get to it. Hey, just real quick, I want to show you this again, but this is so true. Of course, this comes from Scooby-Doo. You know, they always find out who the villain was at the end of the cartoon. But now to find out who's been sabotaging your trading. Aha, it's him. And it's so true, folks. You are your own worst enemy in trading. I mean, you really are. You want to be right. You don't want to be wrong. You'll play tricks in your mind about why it should come back. Just throw all that garbage out of your head. I mean, it's more important to make money than to try to be right. Do you know what I mean? And you're going to make more money if you realize that you're wrong, take your loss, just get out of it and look for another trade. And just remember that, you know, your best trades are in front of you. So, you know, invest your money in good trades. If they go against you, the market has proven you wrong. Just get out. Don't be stubborn, and don't be this guy right here. Okay. So let's go through our current position. Let's go through the watch list today. Apple is, sorry, real quick. All right, so Apple is kind of in this purgatory right now. It would either need to close back above the 200, or what I would really like to see is I'd like to see a close below the 100-day moving average and then close back up, because if it gets down to here, we're going to be in that low 30 range, 30, 35 RSI range. Well, it's 35 right now, so yeah. Well, let's actually take a look and see exactly what it would be. Yeah, 32. So a close under and close back over would be an excellent dip buying opportunity on Apple, because just because we get it doesn't mean it's going to go up. But if we're wrong, it's probably going to go down, and we're going to be wrong small. But if we have a nice rally, we have a small risk, and we may rally all the way back up to here. You don't know. So I am definitely keeping my eye on Apple. I want to be patient. I want to let the trade come to me. I don't want to force it. I want it to play out, reject something to the downside, and come back up. So I already know that there's been some rejection there. So that is my plan on Apple. I'm waiting for a close under the 100-day and then a close back over to give me a good risk reward. Amazon is up a little today. It has had support at this 50-day moving average, but it's also had resistance here at the 20-day. So, where would I be interested in Amazon? I don't know. Probably a close below the 50 and back up, honestly, or a deep dip buy to the 30 RSI would also be good. To the upside, it concerns me a little, but we'll just have to see. But right now, nothing on Amazon. Boeing, this is what I was concerned about with Boeing. People finally are bottom fishing. They buy a deep dip. When it rallies back up to that 50 RSI or tags that 200-day moving average, the people that bought here are very likely to sell here, and that's going to cause it to go down. So I don't like to buy these. Like if this would have closed above the 200, it would have been possible to buy it, but I don't like it because I know the people that bought here sold here. I want to see this come down a couple days and still be strong enough not to come back and test this and then go up and put that higher low underneath me. So close back above the 200-day right now would be interesting for me on Boeing. Alibaba, we almost bought it here. It was under the 30 RSI, did not close back above the 30 RSI, so we didn't buy it. But had I bought it, I most likely would have sold it yesterday when we tested this 200 and rejected the 200. And then today it's back down. Right now we're at a 30.11, so I don't even know if this is going to hold the 30. So we can look at this again if it does close under the 30 and then go back above. But right now it looks pretty weak. And now if this closed at a 30.01, would I buy it? No, I actually want to see it go under the 30 and then close back above the 30. Caterpillar, good example of why to get out of things when they go under the 200-day moving average. If it was under 30 back over 30, I might consider it. I think that actually did happen here. But there weren't any other confirming indicators to me. When we went under 30 and over 30 and it closed back above the third ATR channel, that might be interesting to me. But as is right here, I'm not interested. Canopy growth, we have that. Been a nice trade, 2.67%, pretty sweet. So keep on going there, Canopy growth. Cisco had that big day after earnings, has been moving sidewards, which is positive that it is holding this higher move up here. But for me to get interested, I would need it to come back down into this range, have a V1, V2. So it's pretty strong though, relative to the rest of the market. DDM, we do have this. Close back to my entry point would be my exit to the downside, or a rejection of the 50 RSI to the upside. Dow Jones just kind of moving sideways here. For me to get interested in this, taking out this fractal right here would be interesting, closing above the 50 RSI. So basically a strong move above the 50-day moving average would probably be enough for me to enter the position, but nothing now. Etsy did have a nice move up yesterday. It triggered a fractal. Believe it did close above the 50 RSI, but I decided not to take it because I did not like the 50-day moving average right above me. So really nothing to buy here on Etsy today. Facebook is up today, interestingly enough. We did make a higher low. Here we have the lower low, rallied to the 50 RSI, failed like it generally does, came back down, did make a higher low. It's a 52 RSI, it's above the major moving averages. I mean, it's all positive. MACD is negative. I think on Facebook, folks, that I really want to wait and see if it can bust above this previous range, which is also a fractal. This seems a little range bound here today. I mean, it's up $1.39 on a day when the Dow is down, so it's good relative strength. That is, it is good. You could make a case for this. So we'll mark it and we'll see what happens at the end of the day. 5 below, same pattern, make a low, come back up, get to the 50 RSI, get rejected. A close back above the 20 would give us some clear sailing to the upside. So I'm going to wait on 5 below until we break above this 20 and or possibly we test this 100-day moving average below us again. Gold, we did buy gold when we had a 520 cross right here, did gap up nicely immediately our way. We got out of 50% of the position, and then I wish I would have been able to get out of it there yesterday, but this day, but it did hold support at that 20 and some other things, and so we had to get out here. So all in all, this was a completely break-even trade. Shows you the power and the advantage of phasing when you get something to phase out when the market gives you something. Google, we talked about that, bought this when it came down halfway of this bar, rejected the 200-day. Now we got one profit target yesterday, and we have not reached one yet, the 50 RSI. If we reject that, will be our signal to lock in the profits on the trade, or a close back below the 200-day. Goldman Sachs, getting whooped up on today. Nothing really there, possibly a close below the 100 and a big strong V1, V2 reversal back over might be interesting, or looking for a 30 RSI dip down to here may also be interesting. Okay, so IBB, we do have that. We bought this on the V1, V2 with the higher low and the rejection of the one ATR channel. Got close to hitting one profit target, but as is, we have not hit a profit target. I do want to check something though. Did this get up to 50 RSI today? No, it did not. Had it gotten up to a 50 RSI, there's a good chance I would have just gone ahead and locked in this profit, but it did not test the 50 RSI. So I'm going to give it a little breathing room. Intel did have a decent day up yesterday. This has been, this is another example about why to follow your rules and get out underneath the 200-day moving average. This has just been brutal. I mean, it is finding some support here, which is positive, but we're at 26, 36 RSI. Even getting up to the 30 RSI is going to be some resistance above our heads. So nothing yet on Intel. My gut tells me on Intel that we really need to be patient. I think long term it may be a good buy, but just thinking it's going to be a good buy doesn't mean that's the case. It's okay to have a theory about what something's going to do, but wait for the technicals to show you that you were correct instead of just trying to anticipate it. IWM, we'd have to have a close back above the 200-day moving average, and or a close back to a close back to the 30 RSI for the dip buy, or a close above the 200-day moving average would also be a trigger to the upside. Frederick, hey buddy, how you doing? Nice to see you today, my friend. All right. Coca-Cola, look at that. The consumer staple sector has been weak in the last few days, but boy, it made up for it today. That's a huge day on Coca-Cola. 2% move on Coca-Cola is a ton. So we're at a 63 RSI. This is up in the levels where it's just too high for me to buy. But if any of you had Coke, congratulations. That's a great trade or a great move. Lockheed Martin, one of the few stocks that's making new all-time highs. Or making highs. So, it's 63 RSI. It's just too high for me to buy here, but it is pretty dang strong. MasterCard. Well, we were talking about Visa, and we were talking about going above a previous high and then closing below. Well, see, the same thing happened on MasterCard. See how it's higher than that previous high? And then we closed back below. I'm not going to short this because we already have the Visa short, and these two are very correlated. but just a good example of testing a previous high, and if it closed here, it would be closing below. Yeah, Merck. You know, this is a really tough one, guys, because it did take out this fractal, which is positive. It closed strongly above the 50-day moving average, which is positive. All very positive, but I don't think I'm going to take this one, and I'll tell you why. And this is a good example of your emotions battling your mind. This is a nice clean break over the previous highs here. It's called a flat top breakout, but the third ATR channel is right here. It's getting pretty close. Where would our stop be? Well, our stop, the smart stop would be at the 50-day moving average here. So I need a 2-to-1 risk to reward ratio in order for this to make sense. So here is my risk from here to here. My reward's gonna have to be up here. I don't think it has it in it to go that high. I could be wrong, but at first glance, it's a beautiful setup. But I always look at risk to reward first. It's the most important thing. So there's a big risk, which is fine if you feel like it can go up twice as much as that, but I don't. We're at a 63 RSI. I generally don't like to buy anything over 61, 62. So we're above 60. We're 63, 65, which is a little high. And then we have this third ATR channel up here. So I am going to sit on my hands on this one. It may just continue to run. And if it does, that's fine. But if we come back down tomorrow and we, get into the halfway of this bar, then I may be interested in getting Merck, because then my risk is smaller and my reward, I have more upside reward. If my risk is only from here to here, then my potential reward only has to go to here, and those numbers work for me. But as right now, as they are, I don't think they do. So the plan on Merck is I'm going to see if we can get a pullback tomorrow, possibly in the halfway of this range, and it just makes my risk to reward ratios look better. It reduces my risk and gives me more reward. So hope that makes sense, but I am going to let that one go. Microsoft, it's up today, so that's a good thing on a down day. Really nothing here on Microsoft. Netflix, had a big, strong day. Actually had this V2 yesterday, over the 100-day, the V2 and the 100-day. This is all positive, but do you see how it's at a 50 RSI now? So it rejected a lot of these prices up here. If it closed under 50 and I were in it, I would definitely get out. And even if it closed above 50, I would still stay out because it so thoroughly rejected this 50-day moving average. All right, so Netflix is off the table. Nike, it's making a higher low here, but there's all this congestion above it. I would look for Nike at a buy either above the 50 to the upside or at the 200-day to the downside. Philip Morris, been in a bit of an uptrade. Now it's come back down, tested. It's a 52 RSI. It's okay, but yeah, I'm gonna let this one pass. PayPal is in a range, just moving sideways. The Qs, in order to get interested in the Qs, I would need to close back above the 50-day moving average at the very least, or down here would be a sweet price, everybody, to buy this, because we'd have a 30 RSI and the 200, 100-day convergence would give us an excellent risk to reward ratio. So, my advice on the Qs is let the price come to you. Let it come to the price that you want to buy it at. And personally, I would like to buy it down in this range if we get there. Silver we have It's holding the 30 RSI. It's 31.55, so we will continue to hold this until it closes below the 30 RSI, or, and of course, I will phase out as it goes my way to the upside. The SPY, talked about that, bought that there at the yesterday at the close, exited at the morning for a small loss. I will be buying this at the end of the day as well. Did buy AT&T here when we had this nice break above the 50-day moving average. I should have bought it here, but I didn't notice it. So picked it up here. Did have a really nice 3-day trade for several percent. Did test the 70 RSI and rejected. That's where I got out. But that was a nice, beautiful trade for 3 days. TLT, our bonds. Nothing really going on with bonds there. Tesla is continuing to really get beat up. It's a 22 RSI. Who knows where the bottom of this is? This 6-day TR channel, prices tend to hold those 6-day TR channel in extreme moves. What is that, 174? It could get there. I mean, it's under 200. That was a key level to hold, was 200. So, man, this is a tough one. This I'm not sure where this one's going. So that one scares me. UNG had a big down day today. Nothing going on there. In order for me to get interested in UNG, probably have to get down, test this low down here with possibly a low 30 RSI. See how this low coincides with this 30 ATR channel. So down in here, my experience would tell me having the confluence of a third ATR channel and a double bottom, and most likely a bullish divergence. If it gets down here, you'll have a little red, but it will be more shallow than these bars. So I think a sweet spot is going to be in this area right here. Oil. Boy, this is a tough one because you see how we had this previous support back here on oil in this range? And now do you see how we've tested the 200-day, but we have also tested this previous range, this previous support. So we do have some support here, and we did reject the 200-day and close back. Well, currently we're closed back above it by 2 pennies. On top of that, we had the golden cross. That's the 50-day moving average crossing above the 200-day. That is a long-term positive signal. But I have found in my experience that when you do have a nice cross like this, oftentimes the price will come back to the slower moving average. The 200 is the slower, the 50 is the faster. But when you initially have the cross and the price comes back down to the slower one, the bigger moving average, it was crossed by the smaller one, that generally tends to be a good place to buy. So, I am going to buy a half position of USO today. If it closes above the 200-day moving average, which is 1272. If we're wrong, we're going to be wrong small, because look how close our stop is. If we're right, we could easily go back up to here. Normally, I'd like to see this close below and then back above, but because we've had this recent cross of the moving averages, we have this moving average crossover, the 50-200, and now it's come back down to the 200. I do kind of like that, and I also like that there's some this has been the previous support. So normally closing back above, I would take a full position, but because it did not close back below and above, I'm going to take a half position on USO with a good risk to reward ratio here. Visa, we're short. As long as it stays under this red line, I will continue to stay short Visa. VIX, similar to gold, We had this nice move up in VIX, and we've come back here. To me, it still looks like a regular pullback because we're inside the ATR channels. It's getting a little deep, I do admit that, but we do have this support, this previous support that held and kind of moved sideways. So if we start getting back into this area, I will start adding to VIX as a bit of an insurance. So we'll see if it gets back to here or not. Verizon, I did buy Verizon here on the 16th of May when we took out this fractal. Was a really nice trade, 2-day trade, about 3% or so. It did test the 50 and reject the 70 RSI and reject it, and that was my closeout. But I believe it was a few percent just in 2 days, so it was a beautiful trade. Going forward, I'd like to see it pull back into this area or a bounce off the 20-day moving average would be a place to buy that first dip. XLE, you know, I considered XLE yesterday, if you remember, because it triggered this fractal. But the reason that I did not buy it was two reasons. One, we tested the fractal and closed underneath it. And then on top of that, we tested the 20-day moving average and closed underneath it. So, you know, that's kind of experience, but I just didn't like that there were two levels that it rejected, and was fortunate we did not enter the trade because that's a pretty nasty move back down. So tell you one thing though, keep an eye on, you see this low here, see how deep the MACD lines are, then we rallied. If we can come back, test these lows, we're going to have a double bottom with a divergence, a bullish divergence, which is positive. So I'll be looking, you know, if tomorrow we went down below here, closed back above, and we had the double bottom with the positive divergence, bullish divergence, that would be a good sign, actually. Real estate, nothing really with real estate at the moment. Healthcare is another one of those tough ones because we did trigger a fractal here yesterday. It's a 55 RSI, but we have the 200-day above us. And where would be the proper stop if we entered the trade today? Well, probably down here. So you have a pretty big risk. I would rather see this close back above the 200, and then that bumps my stop up to the 200, giving me a small stop. I always like to enter a position when there's only a small amount of risk. I think it's really the key. So I'm going to pass on healthcare also, unless it closed back above the 200. So Alibaba, no. I think I'm going to let Facebook go. I don't know. I don't like today's action, and I would rather see Facebook get above there. So really, right now, the potentials I see are XLV if it closes above the 200-day, or USO if it closes above the 200-day. And currently, it is above the 200-day. So let me see. Well, I'm happy to say having a nice profitable green day again today, which has been, I think, pretty impressive actually. We've had 4 up days and the market's been haywire all over down. So doing pretty well these last 4 days, and today is a green day as well. All right. Oh, there's Scooby-Doo. Okay. Dr. Jorgensen says, sell a put on the Qs. Well, let's take a look at that real quick. So, yes, I agree. You know, we were talking about where the 30 RSI would be in the future, and the 30 RSI would be, low 30s would be you know, right down in here, the 200-day moving average. So the 200-day moving average is 173.91. So what I'm going to do, I'm going to go over in my other account. Now, the Qs are an index, so you don't get a lot of premium. But let's say we sold the 173.91 puts down here, which means by next Friday, if it does not get down there, we get to keep the money. If it does get down there, we still get to keep the premium, we still get to keep the money, but then we're obligated to buy down here. So 173.91 would be the price. Now you can go out as far as you want with the options, but I like to trade weekly options. Let's just say not this Friday, it'd be a little close, but next Friday, the 31st. So if we 173.91, let's just say 174. Interesting. You get $44. You get $44 per contract if it does not get down here by next week. It's pretty good. I mean, that's actually really good. That gives you a 4.1, 4.2% cushion to the downside. And even if it gets down there, that's probably where you wanted to buy it anyway. Has a delta of 13.48, which means there's only a 13% chance that it's going to get down there based upon historic volatility. So yeah, interesting. But yes, I definitely want to buy this down here. If it never gets down here, at least I get to keep the premium. But you know, there's some other risk issues that you have to contend with puts, selling puts, that I'm not going to get into right now. But anyway, all right, let's go ahead. Oh boy, the time got away from me. I start talking about options. And all right, so what I'm going to do is I'm going to go ahead and I'm going to buy USO. Going to buy a half position.
Order filled.
All right, and then I trade similar accounts, so need to duplicate that over here.
Order partially filled.
Okay.
Order filled.
I'm going to go ahead and I'm going to get my SPY position today.
Order filled. Order filled.
All right, so I have USO. I do have my SPY. All right, so that is taken care of. Let's quickly go through. We only have a few minutes. Anything we need to get out of? Canopy growth, no. DDM, no. Google, looks like we're fine. IBB, SLV, closing above the 30. And Visa has come back our way. So yeah, looks like we're good. We have 1 minute left. You know, the only possibility would this be closing above the 200-day, but I don't think we're gonna get there. But like I said, another profitable day, which I'm very grateful for. I'm always grateful when there's green on the screen, right? Especially when the markets have been down. So you know, I think that the reason we've been able to do that is we've been patient. We have been diversified over different types of stocks and ETFs. We haven't been loaded up on one particular sector. We've had a little long, we've had a little short. So we've got 15 seconds left. So yeah, that's look at Triple M, everybody. Big day up today on Triple M. And it's just been going down and down and down. It finally did find some support. And there's a dividend tomorrow, so you get $1.44 for every share that you have. So anyway, nice day. And let's take a look over here. So, all right. Hey, before we get into anybody having any questions and answers, I just do want to mention that I do offer private one-on-one teaching and coaching and mentoring lessons in the evening time via Skype. So if you feel like that might benefit you, if you feel like you need some one-on-one help to take a look at your trading approach, or you need some help putting together a trading plan, I'm very happy to help you do that. And I feel like I'm pretty good at it, and I've had great success with my students. So if that's of interest to you, please do me a favor and just send me an email. We can have an initial conversation. But my hourly rates and my contact information are in the description of this video. And also, if you like today's live stream, if you learned something, if it was helpful, please do me a favor and hit the thumbs up button. It does help with the rankings on YouTube. So if you do that, I would really appreciate it. So, all right. Does anyone have any questions for me today? Mount Doji, you've had a good run during these turbulent times. Yeah, actually pretty good run. I'm happy to say, definitely happy to say. All right. Anyone have any questions for me today, or would they like me to take a look at a stock, a symbol? I'd be happy to do that. So think about it and let me know.
Order cancelled.
So what did we end up? So yeah, Dow ended up down 100, NASDAQ 34, and S&P down 8. Interesting. All right, everybody, if no one has any questions, oh, here's Frederick. I always wondering if the price are going to break the MA the next day, so I do not trade it. It's better to trade when price breaks the MA and come back. Right, Greg? When do you trade when the price stop on MA? Okay, let me read through that again. I always wondering if the price are going to break the MA the next day, so I do not trade. It's better to trade when the price break the MA and come back. Right, Greg? Yes, if I understand the question correctly, I feel like it's more important if, let me see if I can find an example here, Frederick. Okay, here's an example on DDM. So here we close below the moving average and then close back above the moving average. I feel like it's more important that a price goes below, closes below, and then closes back above, compared to, you see how this bar goes down, tests it intraday, and then comes back and closes. It's still good. I mean, it's still showing that these prices under here were rejected and then closed back above. But I think it is a stronger signal when the prices close below on a closing basis, but then are able to close back above. Was that your question, Frederick? I'm not sure I quite understand the question. It's better to trade when the price break the MA and come back. So yeah, I think that's what you were asking. So yes, I think it's a stronger signal when the closing price closes below a moving average and then back over a moving average, compared to just testing it intraday.
Order cancelled.
Frederick, if you have a symbol that you want me to look at that possibly would help, I mean, is there a particular stock that you're asking me about? Maybe if you could tell me the symbol, we could take a look and maybe I could answer it a little better. Johnny says, what should I look at for selling my Coke? Oh, you had Coke? Sweet. Sweet, sweet. All right. Well, that's a good question. So, if I were in Coke, all right. Well, let's take a look and see what the 70 RSI will be, because a lot of times stocks have a problem at the 70 RSI. So 70 RSI is going to be, now this is just tomorrow. It changes every day, but roughly so tomorrow, if the stock went above 50.78 and then rejected it and came back down, that would probably be the place, if I own Coke, I would get out of. You do have the third ATR channel above you, so you probably are going to find some resistance there. But you can see the last time it hit 70, boom, went down. 70, went down. Right here it hit roughly 70, went down. So for tomorrow, up here in this range is where I would be looking to sell. Where did you get in, Johnny? I don't know if this is long-term hold or a trade, but that would probably also matter to me. But yeah, the one thing I would key upon on Coke would be 50.78. If it got up there, there are going to be some sellers coming up in there, most likely. And then the other thing I could add on Coca-Cola too is that let's see. Well, it did break out even today and close back down a little bit in, but just a few cents. Okay, that answered, Frederick. Good. So, okay, yeah. So looking for the 70 RSI here that's where I would be looking to lock in my profit. If it closed above this level, I would continue to hold it until it closed back below the 70 RSI. If it went parabolic at this level. Another option would be, if it continues to move up, then use the previous day's low as your stop. For example, like tomorrow, if it went below here, I may sell it. You got in at 46.80. $48.60, I mean. Perfect. Nice trade, Johnny. If this is a trade and gets up to here and rejects it, yeah, I would definitely been taking it. But if it closes above, I would keep it, because then it's parabolic. If it's able to close above 70, it's parabolic, and then you don't know what's going to happen. It could really run up. So, I mean, me personally, as it continues to move up, I would phase out. I don't know if you're a phaser outer type of guy, but personally, I would. So anyway, I hope that helps. But congratulations, Johnny, on that trade. That's a beautiful trade. Okay, anybody have any other questions? And you're always welcome, if you have any questions, just to email me, and I'll do my best to get back with you and answer your questions. So, but anyway, just as a wrap up, nice day today, positive day today, profitable day today. We're pretty light actually with our positions. Don't have very large positions right now. The only thing I took today was oil, and it's not a stock too. So good uncorrelated positions. I mean, let's look real quick. CGC, marijuana. DDM is an index. Google, a bit of tech. IBB, biotechnology. Silver, metals. SPY is our regular SPY index trade, and then Visa we're short. So we're not loaded up too heavy in any one stock or any one industry. We have some diversification, and that is the way to trade. So, all right, everybody, have a good rest of your day. Thank you for coming by. I really sincerely do appreciate you taking an hour out of your day to come listen to this live stream. And I really hope it's helping you. I hope that you are picking up some of the things that I'm trying to teach you, And, what I'm really trying to teach you is how a professional trader views the market, views risk to reward ratios, views entries, views not having too high of correlations in your stocks. And then also just some trading wisdom about, battling your ego. It's more important to make money than it is to be right on a position. So, anyway, so I hope it's helping. That's why I started this channel. So, all right, well, have a good rest of your day, and hopefully see you tomorrow, Thursday, during the last hour of the market. Oh, Frederick stuck one in there. In a downtrend, if the price just stop above the 200-day moving average, do you want to buy it or wait to break? You are not afraid to lose the trade. Yeah, I hear you, Frederick. It's a very, very, very good point, because if you're wrong and it goes up, I mean, if you wait for a break underneath and it never does, and then just continues to move up, you're like, why didn't I take that trade? But if you do buy it before it breaks to the downside, and then it breaks to the downside, then you're like, why didn't I wait for it to have a break? Right? Yep, that's the catch-22. My answer to that, Frederick, is this. If you have, well, let's look at USO. This is an example. I did not wait for this to break below the 200 and back over, did I? Or to close under the 200 and back over. I based this upon an intraday bound underneath and back over. So, but if this price had not had this previous support back here, I would not have done that. If this was just hanging down here without any support to the left side of it, I would not have done that. But because we did have some support over here, I did do it. So I guess the best way to explain this, if it closes, if it closed right above the 100-day moving average, like right here, and it didn't have anything to the left, and it closed right there, but it was also a 30, 31, 32 RSI, then I would go ahead and purchase it even though it didn't break below and back above, because I had other supporting technical, either a previous low or a low RSI. But if this today closed right here but didn't have anything below it to the left of it, and it was like an RSI of 40 or something like that, I would wait for the break below and then back above. So that's how I view that. And I understand it's happened to me about 1,000,001 times. Like, why didn't I just get in it? But that's trading, it's never going to be perfect. The important part is that you just have a plan, you have a contingency plan, and go, okay, I'm going to buy this today because that's my plan. It didn't close below and back above, but I do have some other kind of support to the recent left. The left can be 2 months. It can be, Frederick, but I'll tell you this. There have been some studies done, and what I've been taught is that if it's within 30 days, that's the strongest indicator. If something happened within 30 days, I mean, this happened a couple weeks ago, so it's strong. But if it's 2 months ago, I don't think it gives as much weight. I think the window that you want to look at for supporting price action in the recent past is no more than 30 days. So I think Frederick's starting to understand this, because yes, those are the things you struggle with, waiting for the price to go below and above. And if it never goes below and then just takes back off, you're like, ugh. Yeah, I totally get it. That's why it's important just to say, okay, this is my plan, and stick with your plan. Sometimes it's going to work, sometimes it doesn't. But at least the times that it works, if you're trading correctly, you're going to let it move your way, and you're going to be patient with it. And if you're wrong and it's wrong, you're going to be very impatient and get out of the stocks quickly. So, okay, good questions. Really, really great questions. So Okay, well, I hope to see everybody tomorrow afternoon during the last hour of the market. And again, if you have any questions, feel free to email them to me. So thanks again, everybody. I really appreciate you coming by, and have a good rest of your day.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.